Good day, everyone, and welcome to another show interview. And today we will be talking about something that is different, something that is related to financial market, and that is the stock market. I am Crystal Jane Barreras, and I will be your host for today's interview. And in advance, I would like to thank the four young and beautiful ladies who will be joining us today to help us understand the topic that we're going to tackle later. Miss Maydel Misoles, Miss Lillian Gomez, and Miss Clarice Bailin, and Miss Cassie Rabara. So at this point of time, um, we will go through this interview, and we will be expected to understand the fundamental stock market analysis, the fundamental stock analysis, and we will be able to learn to compute the necessary ratios that are included in this topic. And also, we will be able to understand further what money market is and how it operates. Likewise, to the more concepts about more concepts on uh, bond market. Mhm. Now, now this time, there is a sense of importance that we have to learn how to recognize when is is a stock healthy or not, in terms of some quantitative items from financial statements or some qualitative characteristics of a company. And also, we will be focusing on the stock valuation or the fundamental analysis, where we will determine we will determine the stock's um, fair market value. So along the way, um, we will encounter these terms. We will encounter the measurement of asset or the shares and bonds called intrinsic value. We will also encounter the type of stock market analysis that mainly evaluates the price of the stocks, and also the EIC, the economy, the industry, and company, and also the difference between the value and growth investors, as well as the stock analysis ratios which are involved in the analysis of the stocks. And for now, um, we will now begin with the interview. Will now begin at this point of time. Now, fundamental analysts are focusing on measuring the intrinsic values of stock. I am wondering about what they use in evaluations and forecasting relating to global money markets, global financial markets rather, global financial markets. What could it be, Miss Maidel?
Yes, just like any other analysis, an analyst, specifically called as fundamental analyst, needs to have a very careful and detailed understanding about the stocks. They really focus on measuring the intrinsic value of stocks. When we say intrinsic value, these are the measurement or the worth of the assets, shares, and or bonds. So these analysts examine different inter and intra-company factors. In other words, the external and internal factors of the company. So, example of internal factors, this could probably be, of course, very typical example is the company's financial statements, where they will be able to see previews and present performance of the company. So, for the external factors, this could be the financial markets, the country's political conditions, and merely everything about the economy. It is important for them to note the every qualitative and quantitative data that could help on their analysis. So there are several philosophies under fundamental analysis. First is that investors are almost always risk averse, meaning they are reluctant to risk. We all know that inventors are seeking for a bigger profit and wants to avoid any kind of losses. That is why they are very cautious in choosing which company to invest. Second is the time value of money is their basic principle. So they always think that the money can be worth more than its value today. Third is cash flows are helpful in predicting the company's future earnings. So that is a very um, typical that they would think that the cash flows will be really helpful in predicting the company's future earning because the companies has done such earnings like that, so they would think that the company can do something like that in the future again. And the fourth is that tax affects valuation process, which means that the company's performance or earnings would always be affected by the tax. So, in your question, fundamental analysts use this economy, industry, and company analysis. In short, this is called EIC analyst. They would first consider the overall economy. So, first, it is the economy. They have to know if it is in booming or in recession. In a bigger picture, it is really important to know the economy's condition because in whatever decision a company makes, it will always consider the economy because this is like the battleground of any business. They have to know not just the national economy but also the global, since we are living in an era where globalization is being encouraged. So these are exports, imports, deflation, inflation, surplus or deficit, and especially the market risk. This is about the economy. So the next is the industry. So it's EIC. I have discussed the economy. The second is the industry. They have to identify which industry is performing better. For example, if the agricultural industry is in distress, like the prices of staple food is continually decreasing with a little interest of a firm's capital, an investor would not consider involving themselves in this type of industry because they know it would not greatly benefit them since this kind of industry is in distress. So they will choose something that is performing better than that industry. The last thing they examine is the company. So the C in the EIC stands for company. How well it is doing from the past and present, and calculate how risky a business is. This is where they examine the financial statements, sales sensitivity, operating and financial leverage, and also the reputation of the company that has earned throughout time, that they have earned throughout time. Also, it's standing compared to other businesses. This is like where they would get to know the company. So that is the EIC analysis. First, it's the economy. The I stands for industry, and the last letter that would be C that stands for company.
Thank you for that, Miss Maydell. For Miss Lillian, I heard there is one factor that analysts use or analysts are considering in terms of having concrete plans and competitive advantages of businesses. Can you share us the further explanation about that such factor?
Actually, Ms. Barreros, these fundamental analysts are called value investors, as they look at the macroeconomic information, industry news, and the business itself to justify the purchase. There are the five factors outside the company's control. First is the first is the industry and its growth. This is the overall performance of the specific sector. Example of this is the mining and oils and the services or the finance. This is how innovation and development evolve in the market or industry. This includes the automation and technology awareness, adoption rates, and the new services or the products. It's better to invest in a growing industry. Second is the customer. The behavior of the customer towards the product, which may be affected by the preferences, just like the taste and the trends. The taste and the trends can also change constantly. For example, is the long bands. Is the long bands. It is a toy. It is the toy that became a top or the biggest selling toy of 2014, but fell from the popularity the following year. And the next is the fidget spinner that grew rapidly in popularity over the matter of months in 2017. Third is the market share. Out of the total purchases of a customers of that product or services, what percentage goes to the company is defined as the market share. In other words, if consumers buy 100 soap, the 40 the 40 of which is came from the one of the company. That company holds the 40% of the market shares. Say for example is the Marco Polo's hotel. The Marco Polo the Marco Polo's percentage sales is over the hotel in the Philippines. Third is the market share. Out of the total purchases of the customers in that product or services, which percentage goes to a company defines as a market share. In other words is if the customers as a whole buy a 100 soap and the 40% of it which came from that which came from a one company. Um, that company holds the 40% share or the market shares. Say for example is the Marco Polo's hotel. The Marco Polo's percentage sales over the all hotels in the Philippines. Fourth is a competition. Rivalry of the companies that can affect their sales. Then one should look for a company that already earned its name or that has a huge potential to grow and build a name. The impact of a rival which may have a similar product or which may lower its price, this includes the imitators and the price wars and also the product differentiation. Last is a regulation. Rules and laws set by the authority, usually by the government. Government can raise or lower the corporation tax which will impact on profits. They can also businesses by increasing value added tax on the product or the business rates. This includes the government policy, political stability, and the trade tax policy. But business can control external factors, but must respond to them.